Well, good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in the chat box, let me know that you can. I would greatly appreciate it. Afternoon, John. Thank you, everybody. Good morning, Helen. Hey, Kevin, afternoon. Thanks, Andrew. Yep, not on camera yet, Jim. Just sound first, camera second. Do one at a time. I'm just a simpleton, I guess. Just move that around so it's not in my way. Now you should be seeing me. All right. Fantastic. Well, I hope it's been a good day for everybody. As we get started here, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, the setup, or the indicator. All right, we got a lot happenings around Wealth Builders this week. You got Inner Circle today, the 8th. You've got Mastering the Trade, which is for those that are in power option plays. I do a free training for that every 2 months. Mastermind group is tomorrow evening. Trading You is the 15th. Matsuwaka move is coming a little bit further down the road. Power option plays, covered call, explore, E-mini are on regular schedule this week. Free workshops, Power Hour Trading Coaches Playbook as well on regular schedule. And then Brandon has Mastering the Zero DTE, days till expiration, 9th, 10th, 17th, 18th. You got 12s and 8 p.m.s. So make sure you get some. They're all the same training. You're more than welcome to go to. You're welcome to go to more than one, but they are the same training. So if you're saying, "Oh, I get 4," they're the same ones. You can register for 1 or 2, but you don't need to go to all of them. But you are welcome. We also have coming up. It's not on here yet, but you might want to mark your calendars. Let me see if I can find it real quick. I can't. It's probably not on my calendar yet. So we have coming up. Went over it in a meeting this morning. We have coming up a training that I'm going to be doing. Let's see. August 14th at 8 p.m. It is a premium workshop that we are giving away for free. It's a 2-hour training that we're going to go through. It's a State of the Union of Trading. August 14th, 8 p.m. I said we just came up with the date for it today. It is a 2-hour training that we have in the past for our 2-hour training, charge as much as $200. It is free. We're giving this away as a thank you for all of you that are so supportive of Wealth Builders. We're going to go through what's going on in the market, the things I'm looking at right now, what I'm looking to trade, the techniques that I'm using, the strategies, and so forth are all going to be covered inside of that training. So although it's not on here, we will be getting it on soon. Andrew, we need to get that on our upcoming PowerPoints. Check with Lisa, and since Suzanne's out for a couple of days, or Sean, and then give you any details on it. But we definitely want to get that on here. All right, so to the next page. Here's our Follow Us page. Make sure that you are, folks. Our Traders Mental Edge has actually surpassed our regular Wealth Builders account, and we've only got 30 or 40 or so videos up there. It's a great, I look at it as a way of going in there and say, oh, we got a new one up there now, and it's just a mindset, right, to get my day started, all on trading. So let's see. Good morning. Happy day, Jennifer. Oh, good. We'll get into that one in a bit. Nice. Very nice, Jennifer. Good. Good. Yeah, when I ask for the trades, I'll ask you to drop that back in again. Here's our trading manifesto. You can download this on our homepage. You can download it on robertjroy.com. You can download this on tradinglikeaboss.com as well. And then Mastering Zero DTE, I mentioned it before. Don't miss out on this, folks. We only get this, comes up maybe once or twice, possibly a year, when Brandon teaches on this. So he's got it coming up shortly, in the next couple of weeks. So make sure you get registered for that. All right. So what trades have y'all done today? Drop those in. Jennifer, yours is close enough. I don't need you to drop it in again. I could still catch it without all the comments under it yet. So drop in those trades. They could have been trades you did today. Maybe you finish it up on Friday. Something you've done recently as far as trades go. And I'll share with you mine as well. But here is, now this is, many of you know, Tony Benson has taken over the Trade Watch alerts videos, or messaging rather. He's now doing that. So Tony sent in 2 of his trades, and you can see the dates and the times. This is from July 2nd, July 3rd, and July 5th. So he got in on the 2nd and the 3rd, and he got out of all of them on the 5th. Okay. So let's just take one at a time there. Let me grab a drawing tool. It'll definitely be easier for me. So you've got BLDR and BLDR, right? Easier to see it this way. So Tony did on, so Tony's on the West Coast, Washington State. So 9:45 a.m. Eastern, he bought to open 6 of the August 145 puts at 14.80 each. Okay. On the 5th, so a few days after, he closed them out at 15.50. So he got in at 14.80 for that. So what is that? 80 cents, 70 cents. Just got 70 cents on that one. Times 6 contracts, 6 times 7 is $420 on BLDR. I'll just put B, $420 move. That's the move in the options price. And then he did 10 contracts of calls on PLD. Let me grab a different pen color. PLD, PLD. So he bought them at 10.35 on the 3rd. He sold them all on the 5th. Right, but he sold half of them at 11 and half at 11.35. So if you just average that out to about 11.20, he got about $1.15 per contract, so about $1,100, a little bit more, but on PLD, about $1,100. That is $1,500 for the last 2 days. Well, keep in mind 1 day was closed, right? So the 4th we were closed. So Tuesday, Wednesday, Friday. Right, Tuesday, Wednesday were entries, Fridays were closed. So overall, really good job from Tony there. Remember, your trades do not need to be funded trades. We don't call anything funded. Non-funded, if that's what you did today, perfect. You're still welcome to drop those in. All right, let's see what we've got here. So Jennifer was excited. She typed it in right away when she said good morning. Avago AVGO has been very good for me today. About $6,500 in multi-trades this morning. Also Tesla, up $180 so far, but my equities are flat. There you go. Equities aren't doing anything, but options, we are killing it. Great job, Jennifer. Great job. John said Wheel of Fortune on NVIDIA, naked put on Mara, cash flow of $1,400. Very nice. Brenda had 2.36% on SPY on Friday. Excellent. There we go. I love it. Today's been a good trading day. We're up a little bit on the market today. If we look at the S&P, we've got a little bit of, well, we're actually down 89 cents now. We were up, new all-time highs. We were up just a little bit, right? Let's see, is he in here today? No. So I got a friend of mine, Steve, who messaged me about Chipotle and said, should I buy it? And I said, Steve, I think it's going to go down. If you got a strategy on how to scale into the trade so you don't miss out, because there are many times when stocks do splits that they start to move up, maybe a small pullback, and they take off. And if you didn't enter some, you'll never have an opportunity to get into it, right? If you wait for the big pullback, they don't always happen. So if you've got a strategy in there, which I do, that I'll buy some when I see it hit a key level. And if it bounces, great, I'll look to buy some more. If it drops, then I sit back in position 1 and I wait until it finds a bottom and I add a position to it. And every time it moves up and finds a new bottom and bounces, I'll continue to add to it there. So on Chipotle Mexican Grill, what an amazing setup today. An Amazonian setup. We closed up here, right? And it gapped down, went a little higher and fell. The question is, how did it do on that 62.38 level? Right? So let's go look at a 5-minute chart of Chipotle, CMG. All right, so on a 5-minute, we blew right through it. Now let's go back and look at a 1 on Chipotle. What did it do? All right, so it closed right there. Went a little bit further down, moved up, stretched up, fell. So to me, that was the retest and the drop. It dropped from this 62.38 line, went right down to 59.93. So you had about $2.50-ish move to the downside. Overall, awesome. Great move, great opportunity in there. If you only picked up $1.25 on the option, you did fantastic. If you did 1 contract, $125. 10 contracts is over 1,000, 1,100 and change. So really nice setup on como se llama, on Chipotle Mexican Grill today. Now we go back to the daily chart, we look at Tesla. Many of you know that I am very hot on Tesla right now, and what happened today? They gapped down. They stretched to the 245.05 and they bounced. Was there an opportunity there? I don't know. We have to look at the shorter term chart. So let's go look at a 5-minute on Tesla. All right, so what did it do? So here's Tesla. You can see it's 7.8. Right? Remember, we're looking at a daily chart. So we had we'll go back to it for a sec. Come on. We had the gap down. I want to see, did it find support and bounce? So we go back to a 5-minute. We could pull that one in a little bit. So we got the gap down. It ran. And what did it do? It closed. Well, this line is 245.05. It closed on this candle at 245.05. Perfect. The next candle, we get a small move to the downside. We stretch down and we run. There was the bounce right from it. Okay. And it ran up. It had a pullback in there. It ran up to this 255 level. Guys, that's $10. If you had a 70 delta, you're looking at, and you didn't get in at the beginning, you didn't get out at the very top, right? You didn't get in at support and out at resistance. So of that $10 move, let's say you got $8 of it, right? $7 of it. And you had a 70 delta. That's about a $5 move on your option price without a gamma change. That's just pure delta calculation. All right. Overall, great setup today on Tesla, right? And from a daily chart, Omega charts just keep moving everything around. There we go. From a daily chart, it was a great opportunity to add some shares to the position as well. They are now talking about positioning Tesla not only as an electric vehicle company, but positioning them as an AI company. Right? We've got the test coming up in San Fran shortly, where they're going to be testing the unmanned driver, right? The automated driver in there. And they're looking at, do we ever have to drive a car again? I would treasure the thought of not having to teach my kids how to drive. It was just a freaky experience to have to learn, watch them learn, and as I'm sitting on the other side, helpless. There you go, warming up the robo-taxi. There you go. By the way, Jennifer said Avago splitting on July 15th. Thank you for that. All right. So overall, really nice setups today. Good moves. I mean, good moves. And guys, although I don't do it on Fridays, if you're not subscribed to Trade with Rob, I think you might be making a mistake. All right. So this was for Friday. So on July 3rd, you'll see there are 3 trades that we did on July 3rd. AMD, Biogen, and Sigma. Okay. No trade taken on AMD, right? Nothing set up on there. That's number 1. Number 2, Biogen. We did have a trade go off on Biogen, and this was actually a cost of 170. I got the wrong number in there. Okay. There's a cost of 170 in there. It was not a profitable trade. But we made $350 on the first one, on the Biogen. It cost us $170 on Cigna. And overall, here, if I just expand this full screen, and I'll bring you down to the bottom, we're up $1,900, $1,901.85 on the trade. And we've had 6 winners, 14 candidates. 14 candidates, okay? 6 winners, 6 losers, 2 trades not taken. Of the trades taken, it's $158.49 each. This is tradinglikeaboss.com, guys, is where you're going to find this. It is Trade with Rob. All right. So overall, we have got a great systematic approach here to the switchback trade. So these are free candidates I put out a couple of days a week. I don't know if I'm getting one out today just because of obligations this afternoon. I've got to get them out one before I get out of here for the day. But guys, if you go over to tradinglikeaboss.com, or you can go to tradewithrob.com, either one. All right, but if you go to tradinglikeaboss.com, it's right here, Trade with Rob. Register for it. Oh, there you go. Andrew dropped the link in the chat for us. Thank you for that. And go ahead. It's a free video series that comes in, folks. And we are going to continue to keep the records on them week in and week out. So you're able to see exactly how we're doing with it. All right. So let's go ahead and take a look at the S&P 500, at the markets, and see what's happening. So once again, we're getting lots of highs, lots of market highs, all-time high, again on Friday, again today. We've pulled back a little bit. Some comments that we replayed again on CNBC with Powell of what he sees and what we're looking for. And are we going to get a good CPI this time around? If so, is this going to be the beginning of shifting interest rates? Maybe. I don't know if we're quite there yet, but maybe. But we've now, if we go back on this, some of you will remember the ABC pattern that we drew in there, and I want to take it back to that. So we've got this V bottom in there. We came up here, we V'd out on the top. We pulled back to this low before we bounced. So we went through A and B. That's the start of the fibs, the end of the fibs. C was the lowest low that any day had made, on that bounce. And then it gave us this 236, this 618, and this 1. So we were looking at a 100% move or extension to the upside. So that took us to about 5,500. We, of course, got there last week. Whatever day that was, Tuesday or Wednesday of last week. That was Tuesday, because then this was Wednesday and Friday. Yes, that was Tuesday. So we got there on Tuesday of last week and broke through it. Actually, my bad. No, we got up to it over here. That 55.05, that was right here. So we got up to that level, we pulled back, and we bounced off of the moving averages. We talked about this last week with the moving averages going up and this ascending triangle that we had setting up with the this 54.73 line, this brown line being the resistance level on top, moving averages moving higher. Good break to the upside now. So what's our next step? Guys, we could do, and I'm going to do this in depth in October. I think we're doing a Fibonacci training in October. It's going to be probably somewhere about 10 or 12 hours of training we're going to do just on fibs. And we're going to talk about future forecasting on using Fibonacci. But if we just look at this, I don't have a need to draw this in just yet. But if I look at that move right in there, right? Actually, let's do it this one. So I'm just going to say, if this were my A, and this were my B, and this were my C, where would we be? Right? And that 100% extension was just hit again, right? On today's high. The gap up today and the run hit us into that 55.80 and above. So we've hit that 100% extension a second time. It's just showing us the strength in the market. Now we'll talk about in that training with future forecasting or future fibs, as I call it, we'll talk about in that training things like, look at this distance or the move that we made here. Although it wasn't a great move, this was a much better move in here. But although it wasn't a great move, look at how big this was and how much smaller this is becoming. Okay, so we are seeing some changes taking place in there as far as the amount of move we're making before we're getting the pullbacks. Now, a lot happening on top of summertime, which we're going to talk about trading in summertime today, but a lot happening in the overall markets between presidential election, court trials. I don't know if you had heard today, Russia's bombings of Ukraine. I think they said it was the largest they've done in months for a one-day attack, for whatever their reasons were, but largest one today. All of that's weighing on the markets, or concerns of what happens around the world if Ukraine is taken back and what's next. And again, whatever you believe, that's fine. But whether you like it or not, or agree with it or not, it doesn't matter. You can't look at it from I like it or dislike. You need to look at it as what's it going to do to the overall market. Yeah, it is hard to read the chart. That's why I don't have it on there, Brenda. That's why I don't leave it on there, right? For that. And again, we're talking about the reason behind that was where does it go next? So I took it back off. Should be a little bit easier to see. But we're going to talk about how do we use this to find our next highs? Because we're in literally virgin snow. No one's ever walked on that snow before. That's where we are now, right, on the S&P 500. We've never been up in this 55 plus 100 level on the market. So how do I pick? Yes, I've got fibs to work off of, and that's great. But remember, not every fib line is hit all the time. You don't stop right at it. It could blow right through it. So can an ABC type pattern, like the one I just drew, from the low to the high to the pullback, can that give me some insight as to where we might go, looking for confluences and so forth? And we'll have some rules that will apply to them at that point as well. But right now, we hit it today. We're up at that high at this point. So now when we look at where's our next stopping point, 55.99, call it 5,600 to make life easy, would be next. And then we need fibbits of fibbits, so I'm not real crazy about that. We're looking at 56.51 as our next upside target, right? So, and we may get some chop in here. We may get to that 5,600 and fail only because it's a 100-point level. We may get a fail right off of there. I did see today Oppenheimer, I believe, upped its target on the S&P for the year. And not surprising, it's had such a great run hitting these massive all-time highs. I'm not surprised to see that happen, that you'll see more companies come out and do it. But that 56.51 and 5,700, we'll call it, is the next upside target from there. So we've got some room to go on the upside. When we look at the downside, we're looking at about 55.34 is our downside. It gives us a confluence just about of our 8. From there, we're looking at that 54.70 level, the red line that's underneath the dark 54.73. It's the fib line that's underneath there, the negative 382 level. And that and has the 54.73 as well, with the confluence of the 21. So we've got some strength in there, but realistically, when you look at the S&P, to me, this is me. Okay. I look at first what's happening right now today. I want to see what did it just do based on what I was anticipating or expecting it to do. That's the first thing, right? So I would look at today's candle and ask the questions: what did it do? Was it what I expected it to do? Okay, great. Now I back up. I want to see the entire fib, right? And I'm going to take the symbol grid down for now, just so I can get a little more on the screen and still keep everything there. Okay. So now I sit back and it's okay. What gets me in trouble? Right now, hitting all-time highs doesn't get me in trouble. What gets me in trouble? And what I mean by that is, where is my concern? Where is me going, I don't like this too much, right? Well, if we come down and we hit into the 8 moving average again, I don't care. If we break through the 8 moving average, I don't care. If we break down and hit the 21, it's not that I don't care, but we've been there back here, even to the point that we broke through and we snapped back, right? But only one day, on this day right here, May 30th, did we close below the 21. Every other day, we just had wicks stepping through. So we had a low, a lower low, a higher low, great swing low set up in there, and it was a good catapult right off of that. So I'm looking for those swing lows in there. I like, if we identified these days as 1, 2, and 3, right? 1. Let's do it again. Let's do red instead of blue. It's just going to meld in too much. 1, 2, 3, right? What I like most about this is the unequal bottoms on days 1 and 3. I like that not only did we get a higher low than the previous day, than day number 2. Oh, what did I do? My bad. I missed the candle in there. So 1 more time, red. It automatically defaults to blue. All right, 1, 2, 3. Okay. So not only do we have a higher low than the previous day, but I like that the lows from day 1 to day 3 kind of tip up. We're kind of doing this. I'm doing it with shoulders, right? But I like that we stretch down. Bears could not go down as far as the first day. Had it pierced through, it still would give it, if this wick came down to here, it's still a higher low. I like it better when we get what we have now with this low And this low, I like that better. Bears did not drive it down as far, so there was not as much of an attempt. There was a little bit of a pull down there, but nothing crazy at that point. So it pulled down, it bounced. I like that much better. So what I'm looking at over here then is you could break down and hit the 8. I don't care. You can break down through the 54.73. Okay, I'm going to get a little concerned there. Well, my 21 is sitting right there. As long as it doesn't go too far down at 21, and I got a day, maybe 2, I'll allow it to go down there before I'll start to get some concern. So you want to know what you're expecting out of the market. What would your fear factor be? What would cause you to go, ooh, I don't like this, right? Something's different. Now, when I say I don't like this, I hold long positions. I would bet many of you do. Ideally, we want the markets to go up, right? Because long positions are always going to do better when the market's going up. You'll have some that will be contrarian, but overall, you'll have a better market condition when markets are going up, right? But that doesn't mean I can't find short-term trades to do that are bearish, right? Like taking a Chipotle on a bullish day. What was at that time a bullish day? But taking a Chipotle and trading it to the downside because that was the pattern it set up, was right from there, okay? So you want to be looking backwards and seeing what is the next scenario to get you in trouble. We can't look backwards here. We can't look backwards here and say, where's it going to next? We ain't got nothing up there. Again, virgin snow. It's never been there before. No one stepped on that snow. This is a new mountain that got added on top of the tallest mountain in the world, right? Just heavens opened up and it just dropped on top and goes, here you go. There's another 1,000 feet to see out. All right. That's what we're looking at here. There's nothing to look back and say, yeah, I see this as an opportunity. Nope, we don't. We have the fibs to rely on, and we will rely on them very heavily because we have nothing else to work off of. But anytime I can come up with a confluence on my fibs, it's just a home run for me, right? It just makes it that much more powerful to get a confirmation of a line with something else being there. Right? Could be an all-time high, a swing high being in there. That helps. But I really would rather have another set of fib lines of some sort, an ABC where possible. Jennifer says, yes, wanted to go up. Hard to play bearish when mostly bullish. Yes, absolutely. Jim said, if you drew the fibs on SPX from 41.81 to 67.65, the 382 line is the 57.77.91. So, you're just all right, so you're just doing it 60, so you're doing it on the 2 major fib levels then, Jim, is that correct? Yes. Okay, so what Jim is talking about, again, you're talking about forward forecasting using fibs. Fib forward forecast. Okay, maybe not sure what I'm going to call it just yet. Right, but we're all okay. So we're up there, and then we got 41.81. We got a long way to go down here. So this black line down here, 41.81, and this one up here at 67.65. Jim is saying if you drew a fib on that, the 382 line is the 57.78. We'll call it. Let's scrunch down and look at 57.78. Let me get my crosshair back again. So right about there would be our 382 line. So what Jim is looking at is we have a confluence then at that 58.07, right? We're pretty close in that range, right? That's where you're going with this, correct, Jim? Yes, okay. The 50% of those numbers is 54.73. We bounced all over that line. Exactly. Yeah, and the midpoint is that brown line right in here, and it's pretty powerful, okay? So, and again, and that's just it. There's 100 different ways to look at it. We've not been up here before. How do we take advantage of this and still trade it when we don't have something we really can look at to give us a trade, right? Meaning we've got a target based on fibs, and that's where Fibonacci become very powerful. You're trading off support and resistance, diagonal trend lines. You ain't got nothing. There's nothing up there. So you need something like a Fibonacci to help you identify that and set that up, okay? All right. Let's go and take a look at VIX. Let me bring back the symbol grid. Let's go look at the VIX. Don't expect anything crazy. We're up 4 cents today on the VIX. Who cares? Right, we're at 12.52. We were down on Friday, just under 12. I think we broke 12, right? Yeah, 11.86 on Friday. I knew we were close. Friday was not a day I paid a lot of attention to, with a partial day after a major holiday. There were a lot of people still on vacation. It was a 1 p.m. close. I'm sure that caught some of you by surprise. I knew it. I had a line triggered with alarms on TradeStation set up on Chipotle Mexican Grill. And I don't know, it's 2 o'clock. And I'm like, I can't believe it didn't hit this by now. And then I looked at my watch and realized what time it was, and the market was already closed at 1. So nothing really crazy about VIX right now. It's okay. It's okay. It's not telling us anything except that it's low. Volatilities are low, right? And you'll be able to tell that based on options pricing. Okay. So, all right, let me just shut that down, guys. Thought I had that off. Oh, I know what I wanted to show you. Thank goodness. I'm glad I remember that. Let's see. Let me see. Mute. So I have, and I'm very grateful to all of you that have sent voicemails. Someone tracked down an old phone number of mine, and called. Tons of emails, messages on Facebook. Thank you, thank you, thank you. For those of you that said, Rob, is this your account on Facebook? Right? And this is my personal account on Facebook. I just changed or updated my profile picture on Facebook because they made me update it, because I paid for this blue check mark now, which is $12 a month. So I get that blue check mark. Somebody has gone out there and they didn't hack my account, but they duplicated it. They got in and they found that I'm part of Wealth Builders. They've gone over and they've started reaching out to students from Wealth Builders, telling some to go ahead and open up Bitcoin accounts. One person went as far as opening the 2 accounts they told them to open, and they were going to put $5,000 in each, but they called us first. And I had someone call them back on Thursday, Tuesday, Wednesday or Friday, I don't remember, to find out, they just said, hey, please have Rob call me. And we got a call back to them and they said, yep, this person someone is saying that they're you. I just wanted to make sure before I put the money in. I will never ask you for money. I will never say we're going to do an investment together. Who wants to jump in? I will never say, give me access to your brokerage accounts. And if you do not see this blue check mark, it ain't me. I'm going to be doing a video tomorrow, I believe, that'll go on my Facebook and Wealth Builders Facebook. Probably put it on Instagram as well, that says, listen, guys, it's not me. Someone's gone and hacked into it. We've shut it down before, but it's gotten to a point where we paid for now the check mark. So we can get faster support when it happens. I sent a message in yesterday. It was closed down already. I've been trying to shut the newest one down for weeks and haven't had any luck. Many of you have sent messages in to shut it down as well. Today, when I call back, I didn't even look. They say, yeah, it's already been closed. Yeah, and that's why I'm saying to Jennifer, look for the blue check mark. Yeah, I hate that it happens too. Spending money for something that I shouldn't have to spend money for is insane, right? You would think, okay, Facebook, just verify everybody. Just make it part of your safety protocol. And I get the reason why, and it is what it is. But if you see that happen, if you get those messages, it ain't me. All right, it's not me, unless it's coming with a check mark. And the newest one, now I don't know what they're going to do here. I don't know if they can fake the check mark or what. I don't think so. But the newest thing is my picture changed. They had up on the screen that that was the last thing they showed, which was my daughter's engagement. Okay, when she got engaged. By the way, if you do become friends with me and you want to see how ridiculous of a dancer I am, that's it right there. That is a crazy dance with my daughter's Sweet 16, where the slow dance stopped. I threw my jacket. My sister-in-law thought I was going to pick up a bat and kill the DJ, because there was like an explosion. And then we went to this crazy 5 or 6 song medley dance that my daughter made up. So it's all on there. But it's there, guys. So if you see the check mark, it's me. If you don't, it ain't. All right. The engagement pic is magazine worthy. You're right, Deborah. I mean, they had my future son-in-law hired a professional photographer in Georgia to take the photos, right? So, okay. Let's go ahead and jump back into the presentation and trading with summertime doldrums. All right, let's see. Jim said, on your Facebook issue, there has to be a way to trace back to who is doing it. You know, they sent my wife a friend request yesterday as we were in the car. She's like, did you open another account up? I said, again? She goes, yeah, again. Showed it to me. It was the old picture. She knows what to look for now with the photo. I said, why would I send you a request for a friend? We've been friends since you got on Facebook. I was your first friend on Facebook. I joined a little bit before her. Not because I wanted to, because I wanted to check on my daughter, my oldest, when she was on Facebook. So I would assume Facebook should be able to do that to shut down the account. Yeah, and they can, but they don't. They have so many people reporting stuff like this. They can only do it so fast. Now that you pay, that's part of what you get for the pay. Is I was actually on a text chat with a person today. They would have shut them down right on the spot had I proved it, because I had to send in for the blue check mark pictures of my driver's license, front and back. So, but back to trading with summertime doldrums. All right. Right now, and here's the expression: sell in May and go away. The end of May, Memorial Day hits, get out of the market, get out of your stocks, and don't get back in until after Labor Day, right? Because the market in general has a very small move to the upside there. And is it worth selling out your long-term holdings to pay capital gains that you might see a 1 or 2% pullback in the market? I don't think so, personally. But you do have to take into account that, and not every year, but many years, summertime gets very slow and or very choppy. But we have had summertime months, August particularly, you know, when we had stocks that like Google and Amazon that were in the thousands of dollars, right? Power option plays on average, we would do the goal was $100,000 a month or $1.2 million a year, right? Based on that. And then all of these stocks started to split. The only ones we have left up there anymore is Booking and Chipotle, right? Everybody else is gone from that realm of thousands of dollars of stock, you know, $2,000, $3,000, $4,000 stocks. So we see our numbers are less right now, which is fine. I've also cut back the number of contracts we trade on those big ones. That makes it less automatically. We're taking less aggressive trades on them because of the overall market conditions. But August, in the past, 2 different years, we had generated over $200,000 each August. And it wasn't in a row, it was two different years. We generated over $200,000 in the month of August, which were our highest months ever came out of August. So I get the sell in May, go away because of the summertime blues or doldrums or slow or chop or whatever you want to call it. I get all of that, but there are still ways to take advantage of the marketplace. And there are still trades that you should consider doing. So I am a very big fan of leverage wherever possible. And I don't talk enough about them, but credit spreads are an amazing leverage vehicle. I can offset my risk, and with a selling position. So as an example, if the market is making a move up, right, we would look to do a bull put spread, right? So you could find a stock was pulling down, got to a support and bounced. That is where you can initiate the trade, is right there, okay? And then now bullish trade using puts, spreading out your risk with options. So you are taking on an obligation where you are selling somewhere down here. Let's just put some numbers on this. Let's say that this is 98. So here you have a 95 and a 94, right? Put. So you make the decision of, I am going to sell to open the $95 put, and I'm going to buy to open the $94 put. You're always buying the one that's furthest away. Bull put, bear call, doesn't matter. The one furthest away from the price right now is the one you're going to buy. You're going to sell the one that's closer, right? Last company I was with, we used to say things like wings on the outside, guts on the inside, right? They're the insides and outsides, innards and outwards. So, and let's say that for argument's sake on this position, you took in 40 cents of credit. You did it on a Monday. 40 cents of credit on there, okay? Now the stock is moving in a bullish direction. So as long as the stock stays above the 95, I'm doing good. Now, could I have made more money with a directional trade than a credit spread? Oh, without a doubt. You know, if you did a credit spread on Tesla today, could you have made $1? Yeah, easily, right? But if you can make $8 or $9 in the directional, and again, I'm not saying right or wrong, you have to look at what your risk is in that position, okay? So now if this were a Tesla, instead if this was 294 and 295, right, you can get away with much less required in that trade than having to buy calls or puts on a Tesla to make it work. And as long as the stock stays above, the key level is what you sold. As long as the stock stays above 95, you make money. It isn't about hitting home runs all the time. Keep in mind, the average professional trader makes 80% of their income on 20% of their trades. So you're going to have those big runs, those big hits. The rest of the trades are break even, made a little, cost you a little bit. What you don't hear in there is lost a lot, right? Cost you a little bit, not cost you a lot, right? They manage the risk in the trade, and you need to do the same thing. So credit spreads are a great opportunity, a great way on credit spreads to take advantage of these types of moves. Yeah, this type of market. Yeah, Amelia chimed in and said, love credit spreads for summer. Said I got 6% on Tesla bull put spread over the 5th holiday. Okay, nice. Very nice. Yeah, I figured you meant until the 5th. But yes, for the 4th of July holiday. Right? So you got bull put spreads, you got credit spreads. Okay? I am not discounting and saying go to credit spreads and don't trade directional trades. I'm a big fan of still trading directional, right? Single directional trade. So buying calls and puts, CNP calls and puts, right? I'm a tremendous believer in that. What I am not a believer in the summertime because of chop, even in August, where we've had our best months, we've had massive chop in some of those same months. But directionally buying calls and puts, and again, shortening that time frame is very important to me. I have no problem with you holding for a couple of days. The thought of me being in a position that I'm going to be trading, meaning an option trade for 4 weeks or 6 weeks, is very complicated right now for me to grasp, right? It's just not, it's not in my DNA right now to do it. Doesn't mean you can't. It doesn't work for me. I have too much concern with the risk over a very long period of time that I'm in that position. Every day I hold the position, every weekend I hold over, gives another opportunity of bad news to come out or good news, but news to come out somewhere. Excuse me, it doesn't have to be on my stock. It could be on the market. It could be on the economy. It could be on the presidential race. It could be on one of the multiple wars or potential wars going on around the world. All of these things driving the potential getting greater and greater the longer and longer you hold on to it. So I'm a big believer in being out of it within the course of that week. I've switched almost completely over to a daily trade where I'm not getting out of positions longer than a day. And if you look, wherever it's going to open up, let me see which monitor it's going to. Or not. Oh, there it is. Okay, good. Oh, I got to get rid of the lines there. So this was all from the 2nd and the 3rd. These are all trades, and this is, if you look at this top row, it says one contract trade, right? All we're doing in this account is one contract. That is it, just one. Okay. So we had 10 minus 3, 7. 7 trades went off. 7 different stocks went off between the second and the third. Excuse me. Yeah, between the second and third. So overall, great functional, great setup. Actually, this SPY doesn't belong there. We held that one overnight, so I've got to take that out. So we'll take $200 out of there. So it was about $1,500 was the profit for those 2 days, right? If we look at the closing trades, right, we've done 171 minus 3. So 171, we had 6. We had 600. So 177 trades, take away 3, 174 trades we've done. These are all one contracts. I don't pay attention to what it shows here. Because that's not what it is. Let me open the other sheet up. I really want to show you how many trades we've done that are swing trades. Or should I say haven't done? For there to be a swing trade, more than likely we would need something filled in on this first 2 columns there, G and H. Right? April was the last one that we've got on there. Now, I do have some positions open right now. We do have some positions open. We had an Amazon trade that's open where we've got 1 contract left. And we've got a SPY trade that we've got 2 contracts open on right now. So those are swing trades. But overall, we have not had a lot of directional swing trades take place at all. We did a couple this year, maybe a dozen or so, maybe, but that's it. I mean, that literally is it. Right? This is not something that I'm doing a lot of at all. And it's funny, I'll come out and make a comment in power option plays and say, okay, we're going to get ready to start doing some swing trades. We're going to go small. We're going to go with some aggressive trades first. And the market has started to run. And, I've found we got to a point where I feel that I'm comfortable that we can look at the swing trade. And as soon as it happens, we get a pullback in there or the market starts to chop up and we're just not getting a great opportunity to trade them in directional any longer for overnight trades. Day trades, no problem. I can pick a direction based on what I see, and I'll be right 80% of the time on where we're going to move on that position. I didn't say how much it's going to move, but direction it's going to move. Right? And I will be wrong. Don't get me wrong. It happens all the time. But on about 70, 80% of them, I'll be very confident in the direction I think they're going to move just based on how I see the market trading. Okay. Brendan said, I'm like Amelia. I get highs holding overnight. Yeah. And again, the greatest thing about it is you don't have to do either one. You don't have to be a day trader. You don't have to be a swing trader. It's not like one of them are required of you. You do whatever works best for you. Whichever one works best for you. That's what you want to do. So guys, yes, sell in May and go away, buy back again in September. You can do that. You're looking at capital gains if you do. So be very, 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 very careful with that. If that's the case. Okay, number 1. Number 2 is find your directional trades, shorten your time frame if you're using longer time frame. Consider adding some, I'm not saying all, but adding some positions that are selling positions. And you can be doing this with covered calls, with naked puts, selling positions, right? You get paid smaller amount of money than you can make directionally. But if you're right on the move, well, let me rephrase that. If I do a credit spread, a bull put spread, the stock stays right where it is sideways, I make money. If the stock goes up, I make money. Stock goes down, I can still make money. Only if it goes down a lot do I lose money. So I've got a tremendous benefit when it comes to selling positions. What I don't have is the same premium or profit as I do in a directional trade. So you're giving some of that up, and that's okay. You're giving it up for the safety, right? Let me ask you a question. 1 for yes, 2 for no. How many of you would take a trade if I told you, if I could guarantee you that every time you place this trade, you'd make a penny? How many of you would do it? Give me a 1 for yes or 2 for no. Okay, mixed bag. Mixed bag. Do we have a small group in here? Oh, a little smaller today. Summertime, right? Summertime blues. Okay. So, no, if I could guarantee you, Brenda, if I could guarantee you, I'm not saying I am, if I could, right? If I could guarantee you that you would make a penny every time you place this trade. Guys, for me, I'd do nothing else. I would do that trade, just lots of it, over and over and over and over and over again. There was a guarantee that I would never lose. Absolutely. We don't get guarantees. We got to get as close to that guarantee as we can. And we do that by identifying the best trading systems to use with the market conditions that we're dealing with. Right? Yeah, I'm not guaranteeing anybody's going to make. I said, if I could. Right. If I could. You make a penny after commission, Stephanie. Good question. After commission. The whole idea is we don't have that kind of a guarantee. It's not available. Right? There are no trades like that. But it's probabilities. How do I set myself up from a probability standpoint? Right? So Jim said from May 28th open to last Friday's close on the SPX, it's up 4.72%. That's nice. Yeah, it's a great move. Unlike the Dow, I don't know if you guys saw Nike getting crushed again, right? Unlike the Dow, who is not really up that much this year. The NASDAQ, the S&P are up massive amounts. Whoops, what did I do? Going the wrong way. Hit the wrong button. Sorry. I meant to do that on the text chat so I can see what's there. Let's see any other ones. Okay, no, we're good. We're good. All right. We've got a few minutes left. What candidates would you like me to take a look at? Drop them in. What ones you want to see? I'm going to shift this over to all symbols so I can catch a pivot on them. All right, first one in is SPY. We are long in SPY position right now in power option plays. We took our first exit. So life is good. All right. So SPY right now, we're kind of in the middle of nowhere. We're a rank of 3, bullish bias rank of 3. Downside is 551. Upside is 558. So we don't have a lot of room there. I need to pull back, Brenda, and a bounce before I'm going to look to take that one at all. All right, let's go look at Apple. Apple has done phenomenal. My biggest regret on Apple is I did not buy it when it got into this 160, 170 range. That gap up should have been enough of a reason for me to buy, and I did not. And it's run from 185 to 225. So $40 move. Shame on me. No options, no stock. I didn't do anything with it. And I had been watching Apple. Problem is we took Apple out of power option plays, so I don't see it as often any longer. Ones in pop, I happen to focus on very heavily all day long. So let's see, 20 to 29. We don't really need a fib in there. We're close, but we don't need it. So we're in bullish bias rank of 3 in the middle of nowhere. We need the pullback to the 220 and the bounce, and there's the opportunity. A couple of you had Apple in there, so there's the opportunity. Sometimes you think gaps will fill, and Apple didn't. You talking about this one here, Jennifer? This gap? Yes. Yeah, I knew Apple's gap wouldn't fill. Well, how much of the gap was that? The close was 173 and the open was 186. So a little bit more, 70, 73. Close was 173 and the open was 186. So 13 points, right? And this is where to me, I've been logged in. I got logged out. I got to log back in again. Hold on. Having the ability to see what the gap is going to do based on history, that's tremendous. Right? Meaning, if we gap up $2, what's the chance it's going to fill that gap? If we gap up $10, what's the chance it's going to fill that gap? right? So we go back over and I go over and take a look at the gaps. Apple. I'm going to do it from the calendar. Got to scroll up because right there, it shows the year 24. We're going to go back to 22. We're going to go, it's July. So right now, July 4th was there. So yeah, we can use the Friday. That's fine. And we're going to go back and we'll use last Friday's date. We'll use the 3rd, right? And submit. Oh, I don't know what happened there. We got an error. Didn't like the date. Did I have a date? Didn't like the date, I don't think, because that's where we got that 9%. So I'll tell it to you this way, because we're getting low on time. I don't want to run out, so I can't show you guys. Apple has never filled its gap at $13. Doesn't fill a gap of $13 the same day. Right? So there's no way I would look for that to be that kind of gap. This was an explosive gap, right? It's not a continuation because we haven't gapped yet, right? So this was initial gap. We got another one that's a continuation gap. When we run out of steam, it's an exhaustion gap, right? So this gap up, you had a pullback in there, which was fine. And we could have looked for identified potential support areas that we might go back to in there like this, off of this fib line here, right? Which coincides near this top, right? We got near that on these levels here, but I didn't take that. I didn't take off of that, right? That's what I said I should have. But the gap, no. So what's the plan for Apple? So we're looking at, I needed to pull back to the 220 and bounce, and at that time is an opportunity to buy, right? Could you take the break out of 229 to bounce and the move up to 33? Maybe, but it's getting pretty small numbers up there now with that, right? Let's go look at Meta. A couple of you put that one. I'm trying to get the ones that have popped up the most, right? Meta, Facebooka. That's how my mother-in-law calls it, the little Italian lady. Facebooka, Facebooka, right? We had a great move on Friday. Yowzer, right? Great move on Friday. Today gapped up, new high, pull back, right? And we've given a bunch back then. We're down $10 right now. I think Friday was a little bit of an overreaction. But same thing with Meta, right? Meta is not known as an AI company, but they are focusing very heavily on AI right now. They've got billions tied up in AI at this point. So, companies like this that can reposition themselves, pivot, and reposition themselves into different marketplaces that are hot, right? This is it. I mean, we're going to do one of our trainings, I think next week, we're going to do on AI and how to get into AI very inexpensively compared to, NVIDIA and the likes, right? Taiwan Semi, right, is making a big push into it as well, right? So from our counterparts on the other side of the world in the Asian markets, right? Taiwan market. Companies like Tesla repositioning itself. Can you imagine being the number one EV company out there and being the number one as far as AI goes for your sector, for what you do, right? I mean, you're talking about everything that Musk touches turns to gold, right? You got SpaceX, you got Tesla, you've got X, although X has not done so well yet. I don't think he's put the right staff in place yet. I think he's trying to do too much of it himself. I think some of that will change after the election, trying to make sure that the election does stay free and, as far as free speech type stuff does stay free. So on Meta, Jennifer, I would look at that 524 level as my support, get a bounce. 535 is resistance, even on the way down because of the move we've had up in the last 3 days prior to today. Our 8 moving average is going to continue to move up over the next few days, barring a huge candle to the downside. Right. Other than that, we're going to still move up on the 8, which will give you a confluence at the 523.72 level as well. Okay. Brenda asked, what is a rank of 3? So one of the things we do in power option plays, we rank our stocks. So Chipotle. When Chipotle closes, if this was where we closed today, it would be a bearish bias and a rank of 2 because we're sitting near a fib line, but we don't have a moving average confluence there. When we close, I don't really have a good one there. If we close in the middle, so if this moved up and closed in between these two fibs, kind of in the middle of it, the middle third of it, we'll call it, the middle half, really. But it closed in the middle, that's a rank of 3. It's not near a fib line. There's no moving average confluence. If you are near the 8 and 21, and you have 8 and 21 is near a fib line, so we moved all the way back up and we closed near that 62.38, that would be a rank of 1 because we are right at the same level that the 8 moving averages. 8 or 21 works fine, but we're right there. Good, Jennifer. I'm glad. I appreciate it. Holy mackerel, how fast time goes. All right, so Andrew's going to drop that link back in there again, folks. Go ahead and get yourself registered for Brandon's Zero DTE class. Take advantage of it. We'll leave the room open a couple of minutes. I know it's summertime, but it doesn't mean quit trading, right? You got to keep going, keep rocking on, right? You got to keep pushing forward. But what you really need to do is analyze the markets day in and day out and ask yourself or talk out with yourself, what's next? What are you anticipating? And I'm not talking about it from the standpoint of, I think Chipotle is going down today. That's what it looks like right now, and that's what I would prefer. But this would be a great switchback trade for tonight. Because if it moves up for one day and I can get in at 59.90, so get in at about 60 and a half and get out at 62 all day long. All day long. So everybody have a great rest of your day, and I will see you all at our next update. Take care, folks. See you soon. Click on those links. All right. Bye for now.